Yes, hello traders. I hope you are okay. I hope you are fine and everybody's doing well. And as usual, here is Mr. Awesome as normal. I'm giving you the highlight of the market for the whole week. That started, I think it was on 10th of May until 14th of May. Those are the trading days of the week, and today is Saturday, so we are looking on market performance for the whole week. So yes, I'm sure we had analysis for the week. It was on, I think it was posted on Wednesday. It was all about a bullish trending market on gold. So I'm sure for those who were watching the market, I think somehow to a certain extent performance was good according to the analysis. There were very minor variations from the projection. So today I'm going to explain what was happening and those degrees of variations, where they comes from, and now probably what to expect for the coming week. So let's go to our home page, and this is our YouTube channel, mainly known as LITEFOREX Tanzania. Mainly if you are using computer, for those who are using computers, actually they have access to the major links at the top there. Links to our social media, those buttons there, they are active, so you may click to any button that you need to go through. If you need to join the broker, we have LITEFOREX there, the top in forex market, LITEFOREX broker. So you can click there and then register yourself to LITEFOREX broker, and you can get good trading conditions like tight spreads. Also you can trade it through ECN accounts that do not have any spread. Actually it's only commissions, are very little commissions. So you can register to this broker simply by clicking the link at our homepage there. Also we have links for our social media. We have Telegram, we have Facebook, and also we have Instagram and Twitter. All of them, they are right on the screen, so you can do that before going anywhere else. And also another thing that is very important, also you have to subscribe to this channel in order to be able to get those updates. Whenever we upload new video, you'll be able to get notified that there's new content from LITEFOREX Tanzania. So now those are very important things to do before you do anything else. So now let's go to the market to see maybe what was taking place for the whole week. This is trading view, and actually on the right side there we have those various ideas that usually we upload, and mainly it's like we may have no more than two ideas per week. Actually you can have two ideas maybe from gold and silver, but we have added one pair, Australian dollar. We have added a AUD card, so sometimes we may have updates for AUD card because some traders they are unable to trade gold and silver. So if you have maybe enough capital, you can trade gold and silver. There's a very minor variation between gold and silver actually, but gold is the most traded. Therefore gold actually it's very good to trade, it has good conditions, but silver it is not much so common to most of traders, but you can trade it, but it needs to be very careful because it has got very random movement. There's different difference between we have those things, we call it as liquidity, we have liquidity and volatility. So silver is very volatile because it has got less liquidity, but gold, its volatility is low actually because it is the most liquid pair. Actually most people trade it, therefore the rate of exchange in gold is higher than those in silver, but the speed of movement actually is very higher in silver than in gold because of difference in volatility and liquidity. So for those who don't trade gold and silver, you may trade AUD card. Actually AUD card has got positive correlation with gold and silver. All of those three pairs actually, they have positive correlation. Gold, silver, and also have AUD card, they have positive correlation. So if gold is buying, we expect the same direction for silver and AUD card, but there can be minor variations on movement depending on variation in volatility and the liquidity. So now our last idea here was on gold, but informations there were explaining that what we see in gold is expected to happen in silver and Australian dollar. So we had this based on today's market outlook on gold, things goes on, and then here was silver and AUD USD. It is AUD USD will have similar move, but may take place in a varying degrees. So now this was gold, and now let us see what was expected to take place on gold, and now what was happened now in reality. So we were expecting that price had correction after completion of the third. Now it was the third wave, so we're expecting that we'll have the fourth wave down, and finally we expect the fifth wave to the top. So this was our projection, and the fifth wave was projected because we already have this down, up and downward movement that actually was labeled as an ABC. Therefore this fourth wave was a C wave. Actually this has got an internal C wave that usually we expected that correction now is completed. So what we're expecting is continuation of the move to the top, and mainly it was completion of the fifth wave in a higher degree. So we had a very short move here that was now labeled as 1. It was labeled as 1 because it has got fifth internal waves. It has got 5 internal waves. So after completion of those 5 internal waves, the market started to correct. So it was doing a sort of correction there. Therefore we were expecting that it must rise up and then it will fall to complete the correction for the correction of wave, the first wave now. So this movement actually it did well, but it didn't had exact meaning as what we interpreted there. We were expecting that this will be the ABC to the downside, but the market when it was moving in this way, it was not that ABC that we expected. So it was a different market structure, but the variation was not that great. It was just a very minor variation. So we reanalyzed the market and we had a new structure for the market, but it was correlating with what was expected on the previous days. So now we can replay here to see the market performance, and then I will explain the variations from what took place in the market in relation to what was expected to take place when we were uploading this idea. So now checking for the replay here, you'll find that as usual the market was expected to rise up, it rise in here, and then it was expected to fall. As usual it did the same, but we'll find that this fall exceeded the level. It exceeded the level that we were expecting that the market will turn and continue in the upward direction. So now after having deviation to what we were expecting, or to what we expected, because here was number 1, this was the first wave. So usually we expect wave number 2 should not move beyond the beginning of wave number 1. So once it moved beyond, we expect to recount that move. Actually we restart the count. So now we'll find that when it exceeded here, we had a new interpretation of the move, and a new interpretation of the move, it was the idea of combination. The new interpretation was the idea of combination. So wave number 4, instead of having this fourth wave, instead of having just a simple ABC to the downside, it had a combination of structure in order to meet what we call the price targets that were expected. So now this this ABC that we labeled as number 4 at the beginning, it was actually very shallow, so it didn't reach the price target that was expected to occur in the fourth wave. So in order to reach that price target, now the market had a combination of structure. So it had this upward move. This was no longer the first wave. This was A. Then it had the downward move. This was B, and finally C to the top. Now this A, B, C to the top. Now this was just an intersection between two corrective structures. This was a link between two corrective structures. Now the first corrective structure ended there with C. Then after having the ABC to the top, this was flat actually. It was a zigzag because it has got 5 wave in the first wave, then it has got 5 on the last one. So this was not zigzag, it was just it was not a flat, it was zigzag. So after having this as a link between the first corrective structure and the second corrective structure, so we had the second corrective structure which has got it's the same thing as the first one. It had the ABC as usual. It had the ABC. So if you go to the lower time frames, you may understand internal waves on this move. You can understand the internal waves in this move. You'll find that it has got the ABC. It has got three high degree waves. So now after having this up to this bottom, you will find that it extended from this level that we expected that correction has ended there. So it extended a little bit down in order to reach that price target which was expected, and then it started to rise up. So how we label this? Now in our new market outlook, our labeling was altered, whereby here this one we have 1, 2, 3, 4, 5 to the top. Actually, this was completion of the third wave. This 5 wave to the top, this was completion of the third wave. Therefore, our correction started right there to the downside, and this C here, where we labeled as completion of the fourth wave, this was just a W. This was a W. Now, after having this W, we expect usually we have an something that connect the first corrective structure and the second. So we had this ABC to the top, this was X. Now this was X, and finally the last ABC to the downside, this was Z. Now this was Z. So our fourth wave was it was double 3. Our fourth wave was a double 3, and usually double 3 is labeled as a WXY, a WXY. So now after having that WXY to the downside, now the market started a movement to the upside. That was completion of the fifth wave. Actually, it started the upward movement. That was completion of the fifth wave, where it had the first move up, then correction, then up, and now it's like still moving up. So what we're supposed to do is to reanalyze the market to understand if if it has yet completed the upward movement or it is still underway. So now the performance, now mainly, maybe I need to link the idea here. The performance of the market based on what was the market outlook when we were posting this idea. Actually, there's no greater variation on what we expected and what happened. The only variation is having this combination of structure, having the WXY instead of what we expected, the simple ABC. We expected a simple ABC, then the market continues to the top. But because this was too shallow, the market added a connection here, and then we had the second corrective structure in order to go somehow deep to reach that price target. So there was no greater variation from where we expected the market to go and with what was actually happening in the market. So now let's go to the live market to see now what were the modifications and now what do we exactly expect to take place maybe in the coming week. So now we have this move up. We had the Y there and we started with 1, 2, 3, 4, finally 5 to the top. So now we are concentrated on the fifth wave. We are concentrated on the fifth wave, whereby we had the fourth wave right there. Then this fourth wave was in a high degree. So completion of the fourth wave, completion of the fifth wave, since it is an impasse, so it's supposed to have 5 internal waves. It's supposed to have 5 internal waves. So now when we look on the morphology of this fifth wave, we find that we had this one, then we had 2, those are waves which are labeled in white color now. Our concentration on those labeled with white color. So we had 1 to the top, then 2 to the downside, and then we had the third wave. We had the third wave that seems to be extended. The third wave was extended. So at the beginning we expected that the third wave has ended there and then it corrected to complete the fifth wave to the top. So from that observation of the market, actually the performance was quite different because when this movement to the downside was taking place, the internal structures of the corrective wave were showing that the market is still in the upward movement. It has not yet completed the upward movement to have an idea that this movement to the downside is an impasse now. So it was not accepted concept to call this as an impasse because its internal structures were suggesting that it is a correction. So understanding that this was a correction, so we expected to have another move to the top. So now instead of having that market structure that we had before, as I was explaining to that idea that we uploaded, we had this as now from that idea we had this as A, then B, finally C to the downside. Then we expected this movement to the top. It's to the upside. It's just the continuation, but the market did different, whereby after moving beyond this level, where we expected that wave C has completed there, so therefore upward move now is the first wave. So after this upward movement, then correction, when correction moved beyond this beginning of this wave that we expected was number 1, so we had a new outlook which is still valid until now, whereby the first ABC now was labeled as W, then this upward movement was an ABC again which was labeled as X, and this one was just a structure for combining 2 corrective structures. This was just a structure to combine 2 corrective structures. So W, this one, if we need to understand the internal waves, W has got an A, B, C to the downside. A, B, C, A, B. I can change degree of the waves. I can change degree. Also sometimes color, I can put it in white. So now we'll have this A, B, C to the downside. This is just a W, very simple. And then we have the ABC to the top, this was X. And finally, we had this movement to the downside. It has got 1, 2, 3, 4, you see, there's 5 there. If we go to lower time frame, actually, we may understand clearly this, but we have 1, 2, 3, 4, 5 to the downside, then we have ABC to the top, then we have 5 to the downside. So if we need to label those things, actually, we'll have something like this. We will have this 1, 2, 3, 4, 5 up to this point. This was A, then ABC to the top, this was B, and then 1, 2, 3, 4, 5 to the downside, this was now C. So now this is C. Now this 5, it is an internal. We have 5 internal, then we have C, the higher degree. So completion of this wave C, it was in a completion of the wave Y of the WXY structure. This was in the completion of the WXY structure. Then in completion of wave Y, it was just an internal structure in the completion of the fourth wave. In the completion of the fourth wave. So after completion of this fourth wave, what next? The market started to move up. So now this upward movement, it is an impulsive move. The upward movement is an impulsive move. So now let's go to 1 hour time frame to see clearly what is happening in this upward move. So you will find that the market started with this upward move, then it has a pullback right there, and then it had a very strong move also to the top, then a sort of pullback right there, and then it has completed with this market structure that actually, if you have experience with the market, you will understand that this structure here, the final part of the movement here, this seems to be a diagonal. This seems to be a diagonal, an ending diagonal. This one, it seems to be an ending diagonal, and usually ending diagonal marks the end of movement of market in a particular direction. So if this marks the end of market in a particular direction, now in an upward direction now, so we expect now the market has done the movement like this. 1, then here is 2, then we had a 3, then a 4, that was very shallow, then 5, 5 to the top. So completion of this fifth wave to the top, it can be interpreted in different ways, whereby it may be 1, 2, 3, 4, 5 to the top in a completion of the first wave, then we will have correction, then continuation to the top. You can interpret in that way, but what I expect here is the upward move has been completed. Actually, the fifth wave in a higher degree, it has yet completed. Now what next? We expect the market will do something here, and then it will correct down. Actually, correction in a big picture, correction is going to start. It's what we expect. Correction is going to start right at this area. Now, why market will not continue to the upside? Because when we look on the idea of wave ratios or the issues on wave equality, you will find that at a certain degree here, in the completion of this fifth wave, we had the first wave move in white color, then we had the second wave move down, the third was very strong, it was extended. So if the third wave of it was extended, principally we expect that the price travel of the first wave must have equality with the price travel on the fifth wave. So now, just roughly looking on a distance travel of the first wave, if we look on distance traveled with the first wave right there, it is almost equal to the distance travel on this one in the final 1, 2, 3, 4, 5 to the top. So the fifth wave and the first wave have already created equality. They are already in equality, and this is because the third wave has been very extended. It is super extended. So now the major market outlook, the idea that you have to take in your mind for the coming week is market will do something with this very important level right there, and then it will start correcting to the downside. Now this is observations for today, but the clear outlook for the market will be shared as an idea. Actually, we share it on TradingView, also on Telegram. Usually we share those contents on Telegram. So you may follow or join a Telegram channel. You may join a Telegram channel. We share those ideas. This one we shared on, it was on Wednesday. We shared this on Wednesday. So I'm sure if not Monday, it will be on Tuesday. An idea about the direction of movement of gold that applies on silver and IUD USD. Actually, it applies on silver and AUD USD. Idea will be uploaded. If not on Monday, it will be on Tuesday. But for today, what we're supposed to know is on Monday, when the market opens, we'll be looking for formation here. We'll be looking for the market structure right there, and our direction in consideration will be selling gold. But our new idea will give us direct direction and suggestions on what direction of the market is expected for the coming week. So have a nice time and thank you for your time. But what's important, to make sure that you click those buttons indicated there at our homepage, and also make sure that you put comments. If you have any comment, any question, anything else, you may put right there at the comment sections. But another thing which is very important for those who are still looking for advanced Elo to Wave sessions, because we had several sessions already uploaded, so other sessions will still be uploaded. So make sure that you subscribe to this channel, and also you share those contents with the other traders who actually they are struggling with the trading ideas. And one question that was asked by one of a follower of advanced Elo 12, he was suggesting that what if we had a live market outlook, and it was just the issues on those sessions. The suggestion was why we don't have maybe a live market analysis, because usually maybe I'm showing you those analysis right here. We have numbers, we have letters and other things. Sometimes they think maybe those things are coming automatically. Maybe they are coming automatically. There is a certain platform or anything else. This is just trading view. It cannot maybe offer anything automated about wave count. So everything is done manually. So someone asked about having a live count, So no problem, we may plan to have a live count. We can have a webinar one day. We just took a plain pair. We took just a plain pair that has got nothing, has got no any label. Yeah, something like this. A very plain thing. We may took just one pair and then we start labeling the things. So we'll do that because it was one among the suggestions from a member. So yeah, keep on sharing, keep on subscribing. Then put the comments and other things so that we can be growing together. Thank you. Have a nice time.